Well, the price of silver surged today and it's linked to last week's buying frenzy that saw GameStop hit the headlines. Darren Mara joins me in the studio to explain. So, Darren, silver, gaming, how are these two related?
Janice, well, it seems that the online traders that powered the gains for GameStop have taken a liking to the precious metal. The price had risen last week but surged as much as 6.4% to over $28 an ounce, at one point hitting a 5-month high.
It would appear that their next focus is on silver contracts, claiming that silver, or the price of silver, has been held back for quite some time and that it should be higher than where it is now. So the thought or theory is that there'll be some renewed strength in buying of silver in the coming term, and we've seen some silver stocks on our stock exchange go through astronomical levels.
And among them, Silver Mines, which owns Australia's largest undeveloped silver project near Mudgee in New South Wales, closed nearly 50% higher. And Adriatic Metals also saw a big rise. Elsewhere, mining services company Mineral Resources says its operations in Western Australia will continue despite the COVID restrictions being implemented in parts of that state. Engineering company Worley led the market losses. The Australian share market made an impressive rally from a big dip early in the day to close at 0.8% higher. The Australian dollar is buying just over 76.5 US cents and is also weaker against the British pound. Well, low mortgage rates and government stimulus in the housing sector continues to drive the demand for home loans. Latest figures from the Australian Bureau of Statistics show a record high $19.9 billion was borrowed for new owner-occupier loans in December. That's an 8.7% jump, and it coincides with a rise in average property prices.
We could have used the pandemic as an opportunity to lower house prices in Australia, not crash them, but keep them at lower levels and therefore improve affordability, making it easier on a longer term basis for new entrants to the property market to get into the market without taking on too much debt. And therefore we'd end up with a more sustainable property market. As it's turned out, property market has taken off again. At present, we're seeing first home buyers get into the market, helped by government incentives. I do worry about those coming up behind though, because if you're getting in now, you are getting with more, you have to get in with more and more debt.
First home buyers made up a quarter of all housing loans. Power and gas retailer AGL is adding to its portfolio, announcing it's entering the market for mobile phone plans. AGL says it'll offer SIM card deals utilising the Optus mobile network. It hopes to bundle the deals with services for home energy plans. Now, it comes on the back of AGL announcing internet plans late last year. Scott Morrison says Microsoft seems pretty confident it can fill a void left by Google if the tech giant proceeds with a threat to withdraw its internet search function from Australia. Google has warned against the federal government proceeding with a planned media bargaining code.
Bing is a minnow when it comes to preferred internet search engines in Australia, holding less than 4% of the market. But its parent company Microsoft is apparently ready to step up to a bigger role. Prime Minister Scott Morrison seemingly unfazed by market heavyweight Google's threats to pull out if it and other tech giants have to pay news outlets for content under proposed new laws.
I can tell you Microsoft's pretty confident. When I spoke to Satcher the other day, there was a bit of that.
Media watchers note Google's exit could be a blow to thousands of businesses, given Google's dominance in buying, selling and publishing display advertising.
Bing doesn't have the impact in Australia, but if it has the whole market to itself, of course, that could be, it certainly would be a winner for Microsoft, no doubt about that. But that's really just handing a monopoly to another overseas company.
Instead of the government's proposed news media bargaining code, Google would prefer to pay media companies through individual deals. Already it's signed up with smaller outlets such as Crikey, the Saturday Paper and The Conversation. In France, an alliance representing dozens of French publishers recently signed up with Google, but one media watcher says he's not surprised some outlets were ultimately disappointed.
They're getting some money, but they're not getting a fair value of the content that they are creating.
He believes, however, Australia's competition watchdog closely watching the issue will prevent any abuse of market power. While the larger media companies have led the push to derive revenues from the tech giants, a Senate hearing has heard that the code currently rewards larger digitally focused companies.
At the expense of smaller media businesses with true local news that is expensive to produce.
Leading, he says, to reduced media diversity in Australia. Raina Sarumpait, SBS World News.